Hello and welcome back to another episode of Hot Stocks with Jimmy Jackson, where we break down the hottest stock opportunities every day. So today we're diving deep into Krispy Kreme, ticker DNUT, and why right now might be the best time ever to buy into this company. Their stock's been through a rough patch, hitting record lows, and yesterday alone down a massive 25%. But stick with me, I'll show you why this could be a golden opportunity. And if you like daily hot stock insights, hit that like button and subscribe. Let's get into it. Okay, so first, let's talk a bit about Krispy Kreme and their history. It was founded in 1937, and this iconic brand is known for its melt-in-your-mouth original glazed donuts. They operate in 40 countries and with over 17,500 points of access, from company shops to grocery stores and partnerships like McDonald's. Their omni-channel model, think dine-in, delivery, and e-commerce, makes them a global powerhouse. But lately, their stock has been more sour than sweet. Why? Let's dig into the numbers. So Krispy Kreme's 2024 financials tell a mixed story. For the full year, they reported $1.7 billion in net revenue, up 5% organically from 2023. Q4 2024, however, was rough. Net revenue was $404 million, down 10% year over year, missing analyst expectations of $411 million. Adjusted earnings per share was just 1 cent, far below the 9 cents forecast. A December 2024 cyber attack cost them $11 million in revenue, and the sale of their majority stake in Insomnia Cookies didn't help either. And then Q1 2025 wasn't much better, with a net loss of $33 million and revenue of $375 million, down 1% organically. But here's the bright side. Krispy Kreme has shown resilience. They've had 18 straight quarters of organic sales growth, and their global points of access grew in Q1 2025. They're also forecasting 5 to 7% organic sales growth for 2025 despite a cautious 1.5 to 1.6 billion revenue outlook, which is below the 1.76 analysts hoped, but still strong nonetheless. Their debt is high at 1.35 billion, but recent moves like securing 125 into loans shows they're tackling it head on. Now, let's talk about the stock price. Krispy Kreme shares hit an all-time low of $3.26 overnight, May 8th, 2025, a 78% drop from their 52-week high of $15.33. Posts on X reflect the gloom. Investors are spooked by dividend suspension, a paused McDonald's rollout, and high debt. One user called it an historic drop, and they're not wrong, but low prices can spell opportunity. The stock's RSI is in an oversold territory, hinting it's undervalued. Analysts, like those at Truist, still see upside, with price targets ranging from $5 through to $17.50 and a consensus of around $11.50. That's a massive upside potential from current levels. The price-earnings ratio is high at 180 times, but the price-to-sales ratio of 0.6 suggests the market's pricing in way too much pessimism. So, why buy now? First, Krispy Kreme's brand is untouchable. Their partnerships with McDonald's, aiming for 6,000 locations by 2026, and retailers like Walmart and Costco are game changers. They're doubling production capacity in some hubs, running 17 to 20 hours per day. Second, leadership changes like the new CEO, Nicola J. Steele, signal a real focus towards efficiency. And third, the stock's at rock bottom, let's be honest. Analysts think it's oversold, and history shows beaten down stocks with strong brands can rebound real big. Sure, there are risks, high debt, a tough consumer market, and execution hiccups. But Krispy Kreme's restructuring, like outsourcing US logistics and evaluating international franchising, could unlock the value that they're seeking right now. If they nail their McDonald's rollout and stabilize debt, this stock could be a serious multi-bagger. All right, that's the Krispy Kreme breakdown. A legendary brand, a dirt cheap stock, and big growth potential make Krispy Kreme a name to watch. So what do you think? Ready to take a bite? Drop your thoughts in the comments, hit that subscribe button, and ring the bell for more hot stock opportunities just like this. Thanks for watching, and I'll see you in the next one.